Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, October the 11th, 2024. We are green across the board. This is really good. And remember, we had 3 Elliott Wave counts. As you know, we always track a preferred and a alternative, sometimes two alternatives. And if we see price break below a certain key level, we know that we have to switch from the preferred to the alternative. And that is what happened yesterday. And that narrows things down. So now we are back to 2 wave counts because it is good to know what it is not. Now, this is a AI generated slide. When I typed in, it is good to know what it is not. This is what the AI came up with. I kind of like it. I guess it's diverging paths and it leads to something new. In this case, we actually already knew what that new would be. Wow, I'm starting to break my jaw here. So let's go straight to the charts because this is really the power of the Elliott Wave. This is our insurance company policy. So this is what it was not. Remember, we were tracking an A up for wave 3 of this ending diagonal, and then a B wave lower here at the early October low, and then a 1-2 setup. Well, this blue wave 2 had to bottom in this blue target zone here between around 62.5 and 61.5 thousand. Well, as you could see yesterday, we dropped below that low. So this is what it's not. So this can't be a 1-2 anymore, and because wave 2 cannot go below the start of wave 1. You can see we already have some positive divergence. So that's good. So then the second alternative we had, as I am distilling things, is the 1-2 setup lower. Well, this one is becoming less likely as well. It means this rally needs to be a second wave again that cannot go above Monday's high. In this case, this blue wave 2 in Roman numerals, because the teal wave 2 cannot go above the blue wave 2. So this one is becoming less likely as well, which means that we are still in our ending diagonal, but it took a detour, which we already said if we break below this low here, we're going to revisit somewhere around 57,500 ideally. Well, yesterday we got to as low as, let's have a look here, 58,869. So I was off by about $1,300. Well, $1,300 on 50,000, 57,000 is not all that bad. And again, we cannot predict the future, of course. So we were off, I believe, by, let's say, 50,700 by 2.4%. Within the margins of error, that should be around 2.5 to 5%, depending on how nitpicky one is. But it should definitely not exceed 5%. If you're getting above 5%, it often means you're missing a wave. So what we now have is positive divergence. We went lower, both on a closing basis and intraday at yesterday's low compared to the previous week low here. So now we have an ABC completed. It also shows that C does not equal A all the time. It doesn't have to. It can be 0.764. It can be 0.618. It can be 0.886. It's fine. It doesn't have to be CSA, but it got awfully close, right? That's our projection. It's our anticipation, and we monitor and we adjust. We have a very strong reaction. So we've rallied now almost $3,500 in less than a day. And now we need to get back above Monday's high. If we get back above Monday's high, this alternative, which will be sent to you by email, and it will says alternative on the slide, then we have a nice ABC lower, and we are still in this wave C of 3. Remember, ending diagonals, crazy overlapping, so the forecasting won't be as reliable. That is the problem. But so far, so good. This was, right, we had 3 paths. This was about, I believe, on October 7, I even tweeted this or X'd it, whatever it is these days, that we have option 1, we have option 2, and we have option 3. Well, option 1 is now off the table. That was our preferred count. I'd like to be bullish, right? As long as we stay above key price levels. Well, that one's off the table. So then the preferred wave count is this ABC. And I'm talking fast because I'm excited. And the alternative wave count is the 1-2-1-2 setup. Again, you go, oh, how should I trade against that? Well, the preferred wave count is what we trade. Again, we bottomed right here in the ideal B wave target zone, right? With a warning below 57,000. So this is where one should have bought for a low risk. So somewhere around 60,000 with a risk of 3,000 and an upside potential to 80, 90,000. So you have 30,000 potential upside and you have 3,000 potential downside risk. So that's 3 versus 30,000. That is 1 to 10. That is a trade one always has to take. And it shows you it takes some time to get this to crystallize, right? The market takes its time, but we're still above the Ichimoku cloud. Yes, we are below the 20-day and 200-day moving average. So we need to break above those for sure. And of course, break above Monday's high and of course, the September high. If we break above the September high, this wave C is essentially confirmed. It can always become a more dragged out triangle that some people are seeing. I don't think so, because then we really start to make higher highs and higher lows. We already have the higher high here in September compared to August. We already have a higher low here compared to September, which was a higher low compared to August. So this remains a bullish sequence until proven otherwise. And this was the path we had: the blue, the orange, the gray, and the gray. And so far, so good. I like the positive divergence. I haven't seen it in a long time. Neither in the indexes nor in, for example, gold and miners, etc. And from that perspective, gold and miners remains awfully quiet. Meanwhile, you can see it on my X account. We had a bottom alert on Wednesday and things are already up 3 to 5%. Sounds mundane, but once again, remember, gold and silver are heavily outperforming, especially altcoins. Bitcoin, maybe not as much, but they still are, especially since March. So whatever seems mundane, as perceived mundane, is not necessarily mundane. That said, moving on. This looks good. This is our preferred wave count. We should now with this wave C, which should subdivide once again into 5 waves. So we're going to look for 1, 2, 3, 4, 5. And we have essentially 3 target zones. Those are based on Fibonacci extensions. Either C is A in orange, or C is 1.618 times A, or we're about 1.382 times A. All of them kind of match, of course, with the ideal gray wave target zone, anywhere between 74 and 78,000. So you can see the 138.2% extension matches the 161.8%. So somewhere here, we expect a top, somewhere around 74, 75,000 to 78,000, somewhere around there. That would be ideal, but beggars can't be choosers, and we have no confirmation yet. I need, of course, a blue 1 and a blue 2 to narrow this C wave down. But so far, so good. We have nice overlap. And once we top for 3, we're going to get a pullback for 4 and then another 5. And that should complete a larger third wave. And then we're going back into a prolonged corrective pattern again. Okay, so corrections often take a long time. And as you know, the rallies are short and sweet and highly profitable. All right, let's move on to some ETFs that track Bitcoin. This is one of my favorites, BITO. Why? Because it pays a dividend. And as long as things are just going sideways, you get a cash flow out of it. It can be $10, it can be $10,000, however you have much in it. It's nice to have a cash flow while things don't move along. So these are all the dividends being paid out. You can see it's highly variable. And these are the warning levels we had for the bulls since last week. All we did was pretty much close at the second warning level. Okay, so that's been not too bad. And we have an ABC lower. Also here, the C wave so far is only a fraction of the A wave, not even equal in length. And again, we're back above the Ichimoku cloud. We're back above all the moving averages. So this is a constructive development. Now, what do we want to see? We want, of course, to see this break above the September high, which will cause a break above this downtrend line. If we can get a break above this downtrend line, we can target 24 to 29. Okay, that seems quite reasonable for a 1-2-1-2 setup. And I've counted the waves. Excuse me, I'm going to have a coffee. This is just my morning coffee. I have to drink it before 12, according to my wife. Otherwise, I get magnesium depletion or something. Anyway, 1, 2, 3, 4, 5 for 1, A, B, C lower. And we have a 1.38 times A for B. And then this is C. Okay, so this is a irregular expanded flat. And then 5 waves higher, you can count them, with down days that close lower than the previous day as, of course, corrective. 1, 2, 3, 4, 5, 6, 7, 8, 9. So that's an impulse. A, B, C lower. Again, that's 3 waves lower. So far, so good. So this would be 1, 2, 1, 2, 3, 4, 3, 4, 5. I like it. Remember, that is then why this can still be corrective, right? This can be a 3, 3, 5 flat correction. That's why we cannot yet jump to conclusions and still have our alternative wave count, okay? And still have our warning levels on the chart. Quickly back then to Bitcoin, I need to adjust these warning levels for the bulls, of course, accordingly. No, not that one, because we are back above them. So I would say the first warning level is going to be here at the 50-day. The second warning level is going to be at yesterday's low. The third and the fourth warning level remains the same because, again, this B wave here can still be more complex if it wants to. I hear you cringe, but B waves are highly unpredictable. And I'll keep the same levels here for BITO. That then brings me to IBIT. IBIT is another ETF. Also here looks good here for the 1, the ABC lower for the 2, bottomed in the ideal target zone. Also here looks like a leading diagonal wave 1, ABC lower for wave 2. Last week we already bottomed in it. This week we got a little bit better. Doesn't really change the bigger picture. We need to break out above this September high. And that would be really good because, technically the September high connects with the July high, which connects, I believe, with the June and May highs, just as it does here for BITO, right? We have this triangular pattern. Triangles are often corrective. And if we see that breakout, I think we can target around 49 on an ideal Fibonacci-based standard impulse pattern. Doesn't have to be ideal, doesn't have to be standard, but that's all we can go by for now. Okay, that's all we can go by, and nothing to worry about if we go to 60, right? Why worry about it now? That's nothing of our worry. We'll get there when we get there. But this looks good. ABC lower after an impulse higher. I like it. We're holding above the Ichimoku cloud, back above all the moving averages. So this starts to look good. This is constructive. And look at the money flow. There is plenty of room for upside. All right, let's move on to Binance Coin. Binance Coin has been a mess, and I think this is also forming a ending diagonal. Okay, why? Because we have the wave 1, the wave 2, another one, and all the, again, counts better as an ABC, and a 2, and then another 3 underway. I've listed here the warning levels. Yeah, I'm sighing a little bit because it is tricky, this one. It's very messy, but ending diagonals are very common for fifth waves. And of course, it requires, just like Bitcoin and the other ones, breakouts, right? Above the September high, which is equal to the August high, which is equal almost to the July high. And here, the April-May highs. Okay, I'll zoom out a little bit, and you can really see what I mean, why this level is absolutely critical for the bulls to recapture, somewhere around there. Okay, because if we get that, then this wave 3 here should be fully underway. Okay, but we're not there yet, so we'll have to take it day by day. And let me see if I can find the right path. Okay, don't know if this candle is correct, but we'll see. So then we should fill in a 3, a 4, and a 5. Okay, 2 about here. And then, of course, we get another 4 and another 5. So let's move this a little bit. And then still this path here is then still pretty okay, but you can see that the nasty overlap that's occurring that I unfortunately cannot predict. I cannot predict the future. It takes quite a while before it finally materializes. So technically, we should then see a wave 3 on a breakout, right? On this breakout here, we should see this wave 3. And from wave 3 of 3, we should then see 4 of 3, and then we get 5 of 3. So I'm going to color coordinate this. So this is the bullish path. It has not been confirmed yet. Neither has Binance Coin confirmed its bearish path, which I will show in a minute. And then, of course, we get the wave 5 to that 850 plus or minus 50 target zone. Then we get a wave 4. And then we get a wave 5. All right. So this is the preferred path, of course, on a break above this 620 level. Very, very, very important, right? It was resistance, resistance, almost resistance here, resistance, resistance, it's so critical. If we can get above it, then even simple symmetry, right? From about 480 to 620, that is about $140. From 140 plus 620 already gives us 760. 760 gets very close to this 161.8% extensions right there, right between 760 and 777, because that is the symmetry target we'll be looking at there. Let me put that. I know it's a very busy chart, right? Like that, but you can see there's a lot going on to project targets there. That is your symmetry target. See that, how it aligns really well with that one. Okay, 161.8. So for now, let's keep it as is, right? This is symmetry. And as you know, symmetry is very important. We humans love symmetry. We do not like chaos. Our brain doesn't work well with chaos. So hopefully this wave 2 has completed. The warning levels for the bulls are on the chart. They're still the same. I've lowered them a little bit, especially, of course, should not go below the September 6th low, but it has been the case for all cryptos pretty much. And again, I'm only tracking the ones that I so far see the most potential in, like Avalanche and Cardano, Link, and Matic. I don't see any much potential in it just yet. They are, of course, in our ETF trade alerts, but they haven't done very well. No, crypto has done very well due to the overlapping nature. We've had some winning trades, but a lot of them got stopped out often quite soon as well. But then we just keep on chucking along till we catch a new trend, because markets do two things. They either trend up, they trend down, or do nothing. There is nothing in between. Once they stop doing nothing, a new trend emerges, and that's where the money comes from. So we are right here at the first warning level for the bears. This is the complex ABC for this larger B wave. Then we have a large A wave, ABC for the large B wave. I already pointed it out with BITO that we could have a 3-3-5 flat correction. And that is also here, of course, possible. There would be a 5-3-3 correction, also fine. Okay. But again, if we go above 620, then this is most likely unlikely. This is our insurance policy. I prefer this one. I still prefer the fact that there should be another final wave higher. And I think this final wave higher is like Bitcoin morphing into an ending diagonal. Doesn't surprise me, but of course I cannot know that beforehand. Okay, that's just impossible to know. What we do know is, well, most likely a fifth wave is missing. Remember from the bigger picture, let's go there real quick. Let's see here, duplicate this step, see what we get. It's going to go to the Dow Jones. Look at these indexes rallying really nice. So then we go to the big picture, right? That is that we have completed this wave 4 and are now in this wave 5, right? And then the alternative, of course, is that we have topped. But so far, this still looks pretty bullish to me. And that's what we're aiming for. And last but not least, let's quickly go to Solana. Solana's price action is still also a little messy. So this can be the wave 2 here. Still like this path for now. And as long as we hold above the warning levels, we did. Okay, we held above this low. Intraday, yesterday, step below it. So this is still really good. I like it, as well as the monthly chart, of course, for Solana. As you know, 120 is key, getting awfully close, of course, and break above 210 can target 300. If not, then all we got was the 3 waves higher. That is our insurance policy. So this also starts to look more and more like a ending diagonal with the upside targets still the same. And also here we need to see, of course, breakouts above Monday's high is a serious warning for the bears. Above the September high is pretty much the orange warning level. And then, of course, new all-time highs, bears are toast. But by then, we are getting awfully close already to this wave 5. I've here penciled in the ideal Fibonacci-based impulse pattern. It doesn't have to be ideal, as you saw here, based on simple symmetry on breakouts from 120 to 210 is 90. And then we add 90 to 210 gets us to 300. And 300 is only a fraction above the all-time high, which was at around 260. So that matches really well. But again, I've not gotten any confirmation on the charts. This is truly the case, the 345. So we have to be a little bit more patient. But once again, you can see here what is your reward and what is your risk, right? Below 120, especially on a monthly closing basis. So that's about 25 bucks. That is your risk, and the upside reward could be as high as 300. So you have 20 bucks downside risk, and you have 150 bucks upside rewards, all potential. Just pointing it out, one can decide what to do with it. That's just what we point out. That is what the charts are telling us. For now, also remember the chart is not yet 100% bullish. All of those things need to be taken into consideration. As I always say, you don't have to throw everything in the kitchen sink at it at once. You can also ease into positions. You can do staggered buying over a long time. Meaning you're going to buy higher and higher, or you have a buy algorithm that only buys below a certain price level, and that will of course stop you out also below a certain price level, meaning you're not going to buy anything that pops above, in this case 160, but you buy everything that is in between 120 and 160, something like that. That's highly possible with cryptos. And then of course you start selling into strength, all those good things. But also here we're starting to see higher highs and higher lows. I still like Solana, Binance Coin, and Bitcoin. Oh, and that brings me of course to Ethereum. Ethereum is the sucker, right? Look, this is where Bitcoin is relative to Ethereum. Bitcoin is down 14% for the year, I believe, since the March top. Sorry, not for the year, but since the March top. That's about what it is. So Bitcoin is trading at around 3,500 on a relative Ethereum basis. Where's Ethereum? Ethereum is trading at 2,400. This sucker has some catching up to do. So that's why I'm still not really high and dry and giddy on Ethereum yet, for whatever reason. Okay, I don't see it just yet. Again, we need to get above 2,800, as I showed yesterday. Above 2722 would get us pretty far. That is pretty much this high here, gets pretty close to the 2,800 level. And we're miles away. We're 42% below where actually Bitcoin is trading in that sense. So Bitcoin is trading at 3,500. Again, I don't want to talk anything down, but please remember, be preferably in something that is strong and not in something that is weak. A weak can become strong and strong can become weak, I know, but price will tell us. And for now, price tells us we're below the Ichimoku cloud. Everything still doesn't look too good. For whatever reason, investors don't like Ethereum as much as Bitcoin. Don't know why. The why doesn't matter. What does matter is this puppy has some catching up to do. Maybe there's fantastic upside potential. Great. I'll jump on that bandwagon when I see those higher prices above 2722 and above 2800, somewhere around there, because that is of course very resistance, and this was all support. So it's got some work to do. That's what I wanted to show you. I think still Binance Coin has a better potential. Solana has better potential, and of course Bitcoin looks of course still the strongest of them all. Mirror, mirror on the wall, who is the strongest of them all? And I would say Bitcoin. Take care, trade safe, and have a fantastic weekend. Bye.